In a world where time is our most precious commodity, the concept of earning while you sleep is nothing short of magical. Robert Kiyosaki, the man behind the iconic Rich Dad, Poor Dad financial book, has been a guiding light for countless individuals seeking financial independence. What makes his insights so compelling is his knack for simplifying the complex world of finance. He's the man who popularized the idea that you don't work for money. Your money should work for you. In this video, we'll unravel the 7 best Robert Kiyosaki assets that he buys and invests in that harness the incredible power of passive income every year and can also make you rich over time if you start investing in them early. Let's begin. 1. Real estate. Robert Kiyosaki's passionate endorsement of real estate as the foundation of wealth is deeply rooted in the idea of owning tangible assets that not only appreciate over time but also generate steady streams of income. Real estate has historically been a reliable investment, offering both stability and potential for significant returns. Kiyosaki encourages individuals to invest in rental properties, such as residential homes or commercial spaces, as a means to generate passive income. One of the key advantages of real estate investment is the ability to leverage other people's money, commonly referred to as OPM. Through a mortgage, you can secure a property with a relatively small down payment and let tenants cover most of the costs while building equity in the property. As the property appreciates in value, your wealth accumulates, and you enjoy the rental income. Furthermore, the tax benefits associated with real estate are compelling. Mortgage interest, property taxes, and certain maintenance expenses can be tax-deductible. Real estate investors can also take advantage of depreciation deductions, reducing their taxable income. These financial incentives contribute to the attractiveness of real estate as an asset class that can make you rich over time. Real estate can also act as a hedge against inflation. Inflation erodes the purchasing power of money, but real estate often appreciates alongside or even ahead of inflation rates. This means that your investment in real estate is not just maintaining its value, but likely increasing it, allowing you to build wealth steadily over the years. In Kiyosaki's view, real estate provides both cash flow and the potential for capital gains. The cash flow generated from rental properties can offer a consistent income stream, while the property's value can appreciate significantly over time. This dual benefit makes real estate a compelling choice for those looking to build lasting wealth. 2. Dividend-paying stocks. The second asset class that Robert Kiyosaki encourages individuals to invest in is dividend-paying stocks. These stocks belong to established companies that have a track record of sharing their profits with shareholders in the form of dividends. Dividend stocks have the potential to provide regular, passive income, making them an attractive option for long-term investors. One of the fundamental principles underlying the power of dividend stocks is the concept of compounding. When you reinvest the dividends you receive, you acquire more shares of the stock. Over time, this accumulation of shares generates even more dividends, creating a compounding effect that can significantly increase your wealth. In Kiyosaki's view, investing in dividend-paying stocks offers several advantages. First, it provides a reliable source of passive income, which can be especially beneficial for retirees or anyone seeking financial independence. Second, it allows for the potential for capital appreciation, as these companies often have a history of growth. This combination of income and growth can lead to impressive long-term returns. Moreover, dividend stocks tend to be less volatile than non-dividend-paying stocks, as the regular income they provide can act as a cushion during market downturns. This stability can help investors weather economic storms and hold on to their investments even when markets are turbulent. 3. Create and invest in businesses. Robert Kiyosaki is a strong advocate for entrepreneurship and believes that building and investing in businesses is a path to financial freedom and wealth. His philosophy centers around the idea that when you own and operate a successful business, you not only have control over your financial destiny, but can also generate both active and passive income. Creating your own business, whether it's a small startup or a larger venture, allows you to take charge of your financial future. The income generated from your business is an active source of revenue, and by focusing on making your business profitable, you can ensure that it contributes to your overall financial well-being. The true power of investing in businesses lies in their potential for scalability and the ability to create systems that run independently. Once a business is established and thriving, it can generate passive income in several ways. These may include licensing your business model or intellectual property, franchising, or owning equity in multiple businesses. These passive income streams can significantly boost your wealth over time. Kiyosaki also emphasizes that investing in other people's businesses, such as through stocks or partnerships, can provide you with a slice of the profits without the day-to-day operational involvement. This is a way to diversify your income sources while benefiting from the success of other entrepreneurs. Entrepreneurship and business ownership align with Kiyosaki's broader philosophy of not solely relying on a single job or income source, but creating a web of financial opportunities that work together to build lasting wealth. 4. Intellectual property. This unconventional asset class includes patents, trademarks, copyrights, and royalties from creative works like books, music, or inventions. While it may not be the first asset class that comes to mind, it's a hidden gem that can provide long-term passive income with relatively minimal effort. Intellectual property, such as patents or trademarks, can generate income through licensing agreements. When you own a valuable patent, for example, other companies may be willing to pay for the right to use your patented technology or product design. Similarly, owning a trademark for a popular brand or logo can result in licensing fees from companies that want to use your brand's recognition to promote their products. Another significant source of passive income from intellectual property is royalties. If you're a writer, musician, or creator, you can earn royalties from your creative works. Every time your book is sold, your song is streamed, or your invention is used, you receive a portion of the proceeds. These royalties can provide a steady stream of income that continues long after the initial creation of the work. What sets intellectual property apart is its potential for perpetual income. Unlike traditional investments where the value may fluctuate or diminish over time, intellectual property can continue to generate income for many years, even decades. For those who have a knack for creating or a keen eye for identifying valuable intellectual property, this asset class offers an intriguing and potentially lucrative avenue for building passive income and long-term wealth. 5. Precious metals. Robert Kiyosaki's fifth recommendation for building wealth involves investing in precious metals, particularly gold and silver. While precious metals are different from the other asset classes on this list in that they do not generate passive income in the traditional sense, they serve as a hedge against inflation and economic uncertainty. The rationale behind investing in precious metals is relatively straightforward. Gold and silver have been considered storehouses of value for centuries. They tend to maintain their worth over time, and in times of economic turmoil or high inflation, they often appreciate in value. One of the primary reasons to consider precious metals in your investment portfolio is as a safeguard against the devaluation of fiat currencies. When central banks print excessive amounts of money, it can lead to inflation and a decrease in the purchasing power of your currency. In such scenarios, gold and silver tend to retain their value, making them a form of financial insurance. While precious metals themselves do not produce passive income, the potential capital appreciation can be substantial. Over the long term, they can preserve and even increase your wealth. Many investors view them as a crucial component of a diversified portfolio, offering stability when other investments may falter. Kiyosaki's recommendation to include precious metals is grounded in the idea that preserving your wealth is just as important as growing it. These assets act as a financial safety net, providing a hedge against economic uncertainties and currency devaluation, ensuring that you retain your wealth in the face of challenging economic conditions. 6. Agriculture. Agriculture is often referred to as the world's oldest industry, and it's an asset class that Robert Kiyosaki believes should not be overlooked when considering passive income opportunities. Investing in agriculture can take various forms, from owning farmland to investing in agribusinesses or agricultural commodities. Farmland, in particular, is a tangible asset that has the potential to generate passive income in multiple ways. When you own farmland, you can lease it to farmers for agricultural purposes, receiving rental income. This provides you with a consistent and often stable source of passive income, as people will always need to eat, and farming is a fundamental part of our global economy. Additionally, investing in agribusinesses such as companies involved in food production, processing, or distribution can yield dividends and capital appreciation. The demand for food products is unlikely to diminish, making agribusiness a relatively recession-resistant sector with the potential for sustained growth. Investing in agricultural commodities like grains, soybeans, or livestock through futures contracts or exchange-traded funds, ETFs, can also provide exposure to the agriculture sector and passive income potential. These investments are often tied to the prices of the underlying commodities and can generate income as prices fluctuate. Agriculture offers investors a unique opportunity to combine wealth generation with sustainable and essential human needs. Kiyosaki's endorsement of this asset class underscores its significance in the broader financial landscape and its potential to yield consistent and passive income. 7. Energy. The energy sector is another area that Robert Kiyosaki believes holds great potential for passive income and wealth building. Energy is a fundamental necessity in our modern world, and investing in this sector can provide reliable, income-generating opportunities. One of the primary ways to invest in the energy sector is through energy companies, particularly those involved in oil, natural gas, and renewable energy sources like wind and solar power. These companies often pay dividends to shareholders, which can be a significant source of passive income. Energy stocks can be especially appealing because they offer the dual benefit of income and the potential for capital gains as energy demand continues to grow. Master Limited Partnerships, MLPs, are another option within the energy sector. MLPs are publicly traded partnerships primarily involved in energy infrastructure, such as pipelines and storage facilities. They often pay attractive distributions to investors, providing a regular stream of income. Investing in energy can offer the advantages of income generation while enjoying tax benefits due to their structure. Renewable energy sources are gaining traction, and investments in solar and wind energy projects can also provide passive income. Many governments offer incentives and subsidies to promote clean energy, which can enhance the returns on these investments. Kiyosaki's timeless wisdom has already empowered countless individuals to rewrite their financial narratives. Are you ready to be next in line for this life-altering journey?